On this edition of Next Africa, water is fast becoming the continent's defining constraint. With demand rising alongside population growth, supply of potable water is struggling to keep up. I speak with lenders, including the World Bank and the AfDB, who say closing the gap will require faster reforms and far greater investment. Plus, we head to Lesotho, where vast highland water projects are supplying South Africa and generating hundreds of millions in revenue. And in Johannesburg, shortages are turning water into a political flashpoint ahead of municipal elections. Mayoral candidate Helen Zille tells us that fixing the city's failing infrastructure must be a top priority. Hello and welcome to Next Africa. I'm Jennifer Zabasajja in Johannesburg. Access to water and sanitation in sub-Saharan Africa is improving, but far too slowly. According to data from the World Health Organization and UNICEF's joint monitoring program, 840 million people in the region had access to basic drinking water services in 2024, up from 587 million a decade ago. But progress hasn't kept pace with population growth. Nearly 1 in 3 people in sub-Saharan Africa still lack basic water access. The gap reflects service delivery failures, underinvestment, and weak governance, all made worse by climate shocks and rapid urbanization. I spoke with Soma Moulik, practice manager at the World Bank, and she said the lender is working on regional programs to boost access to potable water in the continent. Take a listen.
This really calls for a systems change, moving away from infrastructure and focusing more on institutions, sector governance, turning the utilities, making more responsive local governments, as well as to see that where we can bring in innovative financing, and as well as to crowd in more and more private financing. We know that also the current spending gaps are huge. In any country that we find in Africa right now, that the public financing is even less than 1% of the GDP, which is even lesser than what countries are spending on education, which is around 3.5%. In the health, the spending is around 5 or 6%, while for water supply and sanitation, it's just less than 1%. That's a huge difference, which also means that more and more financing needs to crowd in, and that means more and more innovative financing to crowd in, and also at the same time build up the utilities performance and changing the sector governance.
From the bank's perspective, given the myriad of challenges you just outlined there, how is the bank prioritizing what needs to be addressed first?
From the bank side, the biggest thrust would be to see that we will be able to generate more jobs. And water is going to be the most essential driver for creating and inducing jobs. We know that in Africa, 2/3 of the labor force is dependent on water-related jobs, and that's where most of the jobs will be created. Given that premise, more and more work is needed around building up strong institutions, sector governance that is needed, making it more accountable in terms of service delivery, to see that there are lasting impacts coming in.
Can we talk about the financing? Because it really seems to come down to that. What form of financing is needed? Because the World Bank, we know oftentimes loans, concessional loans, but then we know a number of countries are also turning to commercial loans. When you look at the current environment that a number of African countries are in, what do you think will actually push progress forward?
If you look at financing, we are still looking at public financing. That's where most of the water sector is currently in. And to crowd in private financing, we need to create those enabling conditions, particularly better regulatory frameworks and making utilities creditworthy. Right now, the number of private financing is still very, very small, and it is only looking at the niche areas such as PPPs or performance-based contracts for reducing non-revenue water or in wastewater management. But most of the commercial financing to come in would actually mean that the sector needs to move faster in terms of delivering the services, and bringing it more creditworthy. So right now, even if you see there are opportunities, there is a huge opportunity to crowd in private financing if we change the sector governance. And this is only possible when leaders commit to turning the sector around. There, we have seen some examples of blended finance as well as using guarantees to de-risk projects. We have an excellent example in Angola with the Beta Water Guarantee, which is about in enhancing an expansion of water services in the city of Luanda. It was only possible with the IBRD guarantee of $500 million IBRD guarantee that leveraged 1.1 billion of commercial financing. This is just an example, and we know that these are possibles. And we are working with our own World Bank Group by bringing in the new instruments, the new tools for financing, by bringing in IFC and MIGA more and more into the discussion and dialogue for water.
And the World Bank isn't the only multilateral institution prioritizing water. The African Development Bank says water investments on the continent have increased over the past decade, from upstream preparation of projects to desalination efforts, service delivery, and wastewater treatment plants. But Mtchera Chirwa, the bank's Water and Sanitation Department director, says gaps within the sector won't just be resolved with more capital injection.
A recent report from the African Union actually cited that about 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. I mean, almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen in terms of definition of institutional responsibilities, but also how the sector itself is regulated, tariff setting, quality assurance, improvement of service. These elements need to continue to be reformed and improved to attract more investment.
Is there still friction when you look at some of the other financing projects that are happening across the continent with the bank and some of the individual countries?
I wouldn't call it friction. The bank definitely is not in any sort of friction. I mean, at times it's priorities. Countries have different priorities at a time. And at times we feel like in the water sector, countries need to prioritize more the importance of investing in water as they prioritize their investments. But also, if you look at Africa, a lot of water resources are shared between countries. And that could be a source of friction between countries, because they're utilizing a resource that belongs to them or multiple countries. And we see this also as an opportunity for building peace and regional integration, ensuring that countries collaborate in the way they develop their water resources to avoid friction and potential conflict.
We've also reported a bit on Bloomberg about water bonds that have been effective in some parts of the continent. Have you identified yet which investment instrument is perhaps poised to really enhance and support the growth of this sector?
I think we have to use every instrument available out there. Exactly as you said, bonds are being used. I think we've seen water bonds issued in countries like Tanzania. We've seen sustainable bonds. The bank itself actually also issued a sustainable bond a few years ago, which includes investments in water. So that's one aspect. But also when we talk about climate funds, I mean, if you look at almost all the water projects, they are either climate resilient or mitigating against climate change, and therefore resources from climate funds are a key enabler for investments in water. And when you talk about blended financing, where also we bring concessional resources as well as commercial resources to blend and make it more sustainable and affordable. Of course, there are many instruments. I think we have to apply all of them that are available and can be attractive for the water sector to see the impact that we want to see.
In terms of rates, it might take an amalgamation of different instruments to actually push the needle forward.
Indeed. I mean, currently we still have about 400 million without access to clean water, 800 million without access to sanitation. So we need to invest more. I mean, governments also need to provide more resources within their national budgets. At the moment, most countries are investing less than 1% of their GDP for the water sector, and yet it's so transformative in many areas of the economy and human and social development. So countries as well need to invest more of their resources and make sure also we manage the assets that are already on the ground, because it's not always new money. It's also managing what we have more effectively so that we can reduce waste, ensure more efficiency, and make sure that we can provide services on a more sustainable manner going forward.
Coming up, we head to Lesotho, where water is both a lifeline and a source of revenue, as the country looks to harness its highland reserves to power growth across the region. Plus, in South Africa, Johannesburg grapples with mounting water shortages ahead of municipal elections. I spoke with mayoral candidate Helen Zille on why fixing the city's failing infrastructure is at the top of her agenda. Welcome back to Next Africa. I'm Jennifer Zabasajja in Johannesburg. Across Africa, water is more than a resource. It shapes cities, feeds economies, and can mean the difference between life and death. But in southern Africa's largest city, that lifeline has come under strain. The water crisis in Johannesburg reached a tipping point, exposing the vulnerability of a system stretched by aging infrastructure and climate change. And what many residents may not realize is that much of the water flowing through their taps begins high in the mountains of Lesotho, where a massive new dam project could determine whether Africa's economic powerhouse secures its water future. Welcome to Lesotho, where every home lies more than a kilometer above sea level, making it the highest country in Africa. The so-called kingdom in the sky receives more rain and snow than any of its neighbors. That's why South Africa signed a water-sharing treaty with Lesotho in the late 1980s. The deal meant Lesotho would sell its water, while South Africa would ensure the supply of this vital resource. Just about 7 hours south of Johannesburg sits the Katsi Dam behind me. Now about 30 years old, it is the first model for the water sharing agreement between Lesotho and South Africa. As South Africa's water needs grow, a second dam is rising east of Katsi. The Potable Dam will be nearly 20% larger and is being built higher in the mountains to capture more runoff. Today, around 60% of South Africa's capital, Johannesburg, gets its water from Lesotho, earning the Mountain Kingdom about $300 million a year in royalties.
This project makes Lesotho probably one of the most impactful countries in the world, in the sense that this water powers the biggest economic hub in Africa.
For a country with an economy just over $2 billion and largely dependent on textiles and diamond exports, that income has become one of the government's most strategic revenue streams. On the other side of the border, the urgency is unmistakable. Johannesburg's water infrastructure is under strain and political pressure is mounting. For South Africa, delays are no longer just a contractual issue. They're a mounting domestic risk.
The ailing infrastructure, water infrastructure, is a concern. And all what is happening now is that the system of rainwater is overstrained. And any system that gets overstrained, it collapses. So it is not a deliberate move not to give people of Gauteng water.
The Lesotho Highlands Development Authority oversees construction of the new dam. CEO Tente Tente acknowledges delays, but says the project is halfway complete, with water expected to be delivered to Johannesburg sometime in 2028.
I wouldn't want to deny that there are also issues of maybe performance by service providers here and there, but that is not the only issue. It's a myriad of issues that came up with a mismatch between the planned timelines as well as what is actually happening now.
Lesotho's Natural Resources Minister, appointed in 2022, cautions that Potable is not a silver bullet. Unless South Africa does more to safeguard its rivers and manage demand, more concrete won't necessarily mean more water.
And when I took over, I said to them, look, you guys want water downstream, but you're not concentrating on what's happening upstream. You're building all this infrastructure. So let's seriously look at putting resources into integrated catchment management to make sure that in future there will still be water.
But Porihadi is not only about supplying Johannesburg. For Lesotho, the revenue represents a bid for economic sovereignty and greater energy independence. Expanded hydropower capacity combined with planned floating solar projects could reduce reliance on imported electricity and eventually allow the country to export renewable power to the region.
We are looking into using the reservoir surfaces for production of solar energy. And in the end, we're gonna hit the call from the government of Lesotho to make the country a net exporter of renewable energy.
With financial backing from China, Porihadi is Lesotho's bet on economic growth, sustainability, and regional relevance. It could also shape the destiny of South Africa's biggest city. And as Africa's richest city battles worsening water shortages and with municipal elections fast approaching, water has become a defining political issue. I spoke with Helen Zille, former Cape Town mayor and now a candidate for Johannesburg's top job. She says fixing the city's failing water infrastructure would be her first priority.
The city cannot get the water to the residents because the infrastructure is so broken. The dams are broken. The city loses 46% of its water to leaks, to broken infrastructure, and to theft of water. Those are the major things. And of course, when almost half your water is lost, there is a massive supply problem. Also, Rand Water has an agreement, and there's certain amounts that they can extract from the dams. But in a time of crisis like this, when the dams are overflowing, supply should not be a problem. I think in the longer term, supply will be a problem. I think the Lesotho Highlands project was developed with a view to the extraordinary growth and primary urbanization that we have in South Africa, and then to the economic capital of South Africa and to Gauteng generally. So I think that is to secure the supply for the future. But the current crisis is not a supply crisis, it's a maintenance crisis.
So where do you get at in terms of addressing the issue? I mean, there's some stats that say this is a multi-billion-dollar deficit for infrastructure financing that we're looking at for water. Where do you think the progress starts to come from? Is it like the Lesotho Highlands Dam project?
No, I don't think so, because even if we got all the water that we wanted from the Lesotho Highlands Dam project, we would still be losing water in the system because of broken pipes and bad maintenance. Now, obviously, we fully support the Lesotho Highlands water project because it is critical for the future. But we have to start on ground level and fix the infrastructure that we've got. It is a multi-billion-dollar project because the maintenance has been neglected for 30 years. So, for example, there are 4 critically endangered reticulation systems in Johannesburg, and no matter how much water there is in the system, those reticulation networks can't deliver the water to the people. And that is the crisis currently that we're facing. So Johannesburg's part of resolving the crisis is not at source, not at supply. In any case, that's a national government competence. That's why the agreement is between Lesotho and our national government. But with us in Joburg, the problem is with getting the reticulation system in top shape.
Coming up, Africa needs billions to secure its water future. We examine whether innovative financing tools like water bonds can help bridge the gap. Next. Welcome back to Next Africa. I'm Jennifer Zabasajja in Johannesburg. African nations are searching for ways to close a massive financing gap, and blue and green bonds are emerging as a potential path forward. Bloomberg Africa senior reporter Yinka Ibukun joins us from Accra. Yinka, we've already seen some test cases of this.
Benin took a pioneering step of actually issuing an SDG bond, a Sustainable Development Goal bond, in 2021. And it was a 500 million euro bond, and about a sixth of the proceeds for that bond were to be spent on the expansion of access of clean water in Benin. That was quite unusual because that's usually something that you wouldn't go to commercial lenders for, but it was twice oversubscribed, which shows that there was an appetite at the time for the kind of debt that has an impact. And so that was a really impressive move from Benin, which from anecdotal reports has had an impact on the ground. But that's also something that's not actually accessible to countries that don't have investment grade credit ratings. And today, the reality is that most countries in Africa do not have investment grade ratings, which means that they're essentially not able to issue that sort of debt.
But, Yinka, we did hear about a water utility that was in Tanzania and actually managed to finance their own water project without borrowing in dollars, which, again, just speaking to what you're talking about, lending and commercial lenders could be significant for some of these projects on the ground. Why do you think that's important?
That was the Tanga Wasa 10-year green bond that was issued by a utility in Tanzania. And that was interesting because it was issued in local currency, which basically protects the investors from, and also the Tanga Uwasa from currency risk. What happens is that if you borrow in euros or dollars, if your currency depreciates, then your debt automatically gets more expensive. A lot of African currencies have been depreciating, and so that's quite an issue when you need to repay the debt. And so it was very interesting that this green bond, which was the first in East Africa, was able to happen and was used to expand again access using a commercial case that investors bought into.
For those countries and communities, Yinka, though, that badly need water infrastructure repayments or repairments, they're sometimes the least attractive to private investors in various cases, as you outlined just there. Who are we seeing then stepping in to finance some of these projects if some of these communities can, in fact, get a bond?
Non-commercial sources of funding have reduced. I mean, since if we look at Benin in 2021 or even Tanzania, since those issuances happened, aid has significantly reduced when you look at countries like the US and some European countries. So that would have been a key source of financing for the sort of projects that actually help provide more access to water. And then in addition to that, social spending in a lot of African economies has reduced because they've had to keep up with debt servicing payments. In many countries, debt servicing payments exceed what countries pay on health. And so the issue is that bonds still remain a commercial solution that is only interesting to private investors if there is a gain. And also, in addition to that, countries or entities looking to do that need to have the institutional capacity to structure a bond. Unfortunately, as it stands today, it's still an exception rather than a rule in many parts of the continent.
And that's Next Africa for this month. But don't forget our weekly podcast for more of what's happening across the continent, available on Apple, Spotify, and wherever you usually get your podcasts. You can also subscribe to our daily Next Africa newsletter, available on the terminal and website for even more reporting from the Bloomberg team. I'm Jennifer Zabasajja in Johannesburg. We'll see you next time.